19 April 2023, Wednesday. Guys, apology, my nose is really bad. I'm basically having a bit of fever right now and my sore throat is there. So I'm very sorry if my voice can't perk you out today. But this is going to be interesting. I always get them confused at one stage of my time, Jeremy Grantham and Jeremy Siegel. And now it's clear. All right, the one on the left side is Grantham. The one on the right side is Siegel. Now, Siegel himself is actually a Wharton professor. So the thing is this, a professor is calling for bullish right now, whilst General Grantham is calling for bearish. So the question is, who should we trust? Both of them are definitely very seasoned investors and traders, but they have very extreme view. So what do you think? What will be your answer then? Leave me a comment in the comment box. Let me know your take as of the market right now. Now, once again, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, thanks guys for the great lunch come out, guys. The place was good. The food was pretty good, pretty decent. The omakase you can try. And if you're a UOB client, you can actually go for the one-for-one deal. It's about $128. So pretty decent, good food. So guys, if you like omakase and you stay in the east side or central, you can try it out at this Golden Tower. Okay. All right, for those who have missed it, right, don't worry. On the 3rd of May, we're going to have this Tomahawk King barbecue. All right, going to have great beef. By the way, this is beef, yeah? So, of course, for those who can't take beef, then it will be pretty sad too. Of course, there's other stuff, but you don't expect pork because it's a halal restaurant, yeah? Okay, it's somewhere at this 324 Changi Road, all right? So, we're going to have this on 3rd of May. So, guys, continue to send a comment for my video, and we'll pick it up, and then we'll do the spin the wheel next Saturday, okay? All right. Now, let's recap what happened last night. Wow, once again, the US market did a recovery again, another doji for the 3rd straight day in a row. The US market really know how to play this game. And we can see right now, right, Microsoft, Apple was totally flat for the day like Amazon. Only Google continued to go lower because of the their Bing case. And of course, we see Johnson & Johnson was surprisingly lower. That was because of their data was not too good. But the bank shares was decent because the data came out rather okay. So overall itself, right, the market is lackluster, no direction. Everybody seemingly is like, bad news, all the good earnings doesn't really see follow through buying. So that's my reason why I felt that maybe this Siegel got it correct. So basically, right, Bank of America coming out result, Goldman Sachs numbers was not very fantastic. So again, all these tells me that we should be careful. And of course, streaming giant Netflix disappointed investors. A lot of people was buying in ahead of this, expecting the number to be good. We saw the numbers came out and the share dived by 15%, but very fast, within less than 5 minutes or so, the share rebounded by 10%, so down by only 5%. So this is the power of money going on. So on one side itself, you may say that shows that the market is bullish, but on the other side, that means that the earnings are bad, but people are just buying relentlessly. That is really a very scary thing. Remember, I mentioned to you about the UK inflation, and I said that it will go back to 10%. Now it's happening. The latest from CNBC. The surprise comes in again as the March figure holds above 10%. So the market was looking at 9.8, but it came out 10.1. So again, that shows because of the soaring food prices and the energy bills. And these two things were the ones that would basically lower down the US inflation last month. So to me, I mean, it can't be only UK suffering, right? It should be US. So of course, there's a lot of way they're being creative here. So in my opinion, this is actually a prelude to what will happen for next month's CPI data for US. I'm very confident the number will be higher than the last time. Okay, I'm very confident. Let's see whether I'm right. So now the Bank of America, Bank of England now has a bit of task right now because they are looking at to hike rates, right? And of course, by hiking rate, it will send a problem to all the banking industry, which is happening to US right now. And of course, if the US and the energy prices have to go higher, which I suspect it will, then that will basically push this Bank of England to continue the rate hike. And of course, if they continue to do that, wow, this could spiral to something very crazy. So that's the reason why I feel that we are going to be on a checkmate positioning soon. So of course, Baller interestingly come out, says that there will be more rate hike, but he says that he don't see recession. No, this is very interesting. He says that the Wall Street is very engaged in the idea there's going to be a recession in 6 months' time, but it isn't the way you will read expansion like this. So to him is that rate hike is important to curb inflation, but because of this thing, there will be no recession. So Well, I just had to smile. Maybe he has his reason, but I just can't see it how it connects, because we can see the numbers are all coming down right now. What is EPS, earnings, this numbers, valuations, all is coming down. So all I can say is, let's see whether he's right. So let's hear what the Bloomberg course has to say.
Heading to the chorus of Fed officials wanting to rein in inflation further. Rein it in further and pushing back against the idea that as they continue to hike rates, we are going to see a recession, and that is the risk they're taking on by doing that. And of course, Raphael Bostic, president of the Atlanta Fed, is someone who has been not super hawkish, but slightly in the hawkish camp when he calls for more rate hikes and when he says that there is still more work to be done, and I am ready to do it. I think we have to believe him. And of course, what he's saying, what others are saying about one more hike, Wall Street's accepting it now. Wall Street figures that yes, in the May meeting coming up in just a couple of weeks now, there's going to be a 25 basis point hike. That's going to take the key rate up to about 5 to 5.25%. But then the markets think that will be the last one, and Raphael Bostic seems to open the door to a pause as well. In terms of playing down the recession risk, he's saying the economy's performing strongly. He says acute bank tensions, meaning SVB meltdown and more, that seems to be subsiding. And he said the bankers are telling him their customers aren't calling now and asking if they should move their money. They're not taking deposits out and putting them in bigger banks. And so he seems confident that this is the right thing to do. Now, Jim Bullard, president of St. Louis Fed, who has been one of the more hawkish members of the Fed among central bank presidents, is still pushing for more and a bit more. He said that he does not see a recession ahead. He says Wall Street's very engaged in the idea. This is a quote from him doing an interview with Reuters today. Convinced there's going to be a recession in 6 months or something, but that isn't really the way you would read an expansion like this. And then he goes on to specifically cite the strength of the labor market, very important to him. When it comes to the banking crisis, banking turmoil, whatever you want to call it, he said, you know, if we were in a crisis or going into one, our St. Louis financial stress index would go up to 4 or 5. Heidi, he said, it's not spiking, it's at 0 now. Another way that he's confident he can go ahead, get to 5 to 5.25, but he thinks ultimately that rate's going to get to 5.5 to 5.75. He's looking for the 5.6% ceiling. So we'll get a lot of information now from that meeting in a couple of weeks. We'll get the read from Jay Powell on what kind of expectation as a group they're looking for. But for now, we can see two voices who seem very convinced at least one more rate hike.
All right, so you can hear for yourself very clearly about this. Right, Baller is looking at 5.5, 5.75 to even 6 as ceiling, and that's the same number that I mentioned, okay? But Bostic, right, himself, right, he expect also coming in, but he expect the rate hike to go up and then stop there of a pause, okay, for quite a period of time. Now, I want to tell you this, guys, look, from 0% to all the way now to 5% has already caused the CPI data to come down. That's a good thing. Inflation is coming down. But this period of time, while this was going up at the same time, we have banks suffering. So the question is this, okay? If let's say we don't have a pause, we're still going to still have this gradual movement here itself, right? Which means that it goes up a little bit more like this to 6%. So what do you think will happen? All right, that means that more banks will suffer, more banks will have into trouble, and there'll be more banks coming out and say that, look, that we're going to file in Chapter 11. All right. Now, even let's say the Baller doesn't get what he wants, that 6% doesn't get it, okay? We have a 5.25 to 5.5. Maybe we're going to have this a bit of more hike a little bit, then we pause for a while. What happened? This is still going to hurt the economy because the economy is not ready for a 4% to 5% interest rate. Well, just last year alone, we only have 0%. This time, the hike is so fast, so rapid, it's not going to help. And that's my reason why I feel that this is not going to go out well. So with all this information, let's see what Jeremy Siegel has to say. Because in his opinion, unless you are very tactical and short-term, right, he believes that this is going to be the start, the bottom of the market, and he feels that, right, the core inflation has been wiped out. That is very interesting. So let's see what Siegel had to say right here.
Even though it might be rough over the next 3-6 months, unless you're very tactical and very short term, I mean, I'm not a seller.
Okay, so
We empower
basically
those.
he's saying that he's not going to be a seller because the whole video is like quite some time, so I can't bring it to you, but you can Google on this. Basically, his point is that he don't think it should be a seller market. In fact, he said that it's time to buy and keep it. It might be a bit of turbulence, but overall he sees bullishness. All right, so you can watch this video on your own. All right, let's move on. So for Jeremy Grantham, right, he is more to the bearish side because he feels that the same thing is happening. Now, he predicted the dot-com crash in 2000, and he also predicted the financial crisis in 2008. So now he's saying that, right, there will be more selling. And one of the things that he say is because of the presidential cycle. So apparently he did his research and says that from October 1st of the year 2 to the April 30th or year 3 of the presidential cycle, which is this year, there's a chance that the market will rally. And we saw that, in fact, we really saw that the market really rallied from October. Interesting. So, but after April, I mean by 1st of May, which is a couple of weeks later, he says that most of the time the market will be down. Wow, that's interesting. So maybe the next time we have another presidential election, a president coming in, just remember that, okay, on the year 2 October to the April of the 3rd year, seemingly is like a repeated pattern. So if this is correct, then likelihood that his forecast is that there's going to be a sell down. And interestingly, the number he gave is the same number that I had. I was also looking at 3,200, and now he says that there's a chance of 3,200 coming in. Well, that is interesting because that is the same number I have. And his reason was simple because of the inverted yield curve. We can see that every time when an inverted yield curve comes in, we have a recession. So this is the 10-year and the 3 months, and we are now at the one of the worst levels since all the way back to 1980s. So every time when you get to see this, you get to see recession. So it cannot be different, guys. This is what he's trying to say. Every time when you see an inversion, you can see the recession coming in every time. So this time, it shouldn't be not. So that's why if you look at it overall right now, it's pretty clear that recession is coming in. Although I've been calling this for the longest of time, people have been laughing at me, but I think the numbers are pretty clear. All right, so let's look at the PMI number. That's something that I want you to look at it. This is the PMI number in 2009, 2021, and this year. And you can see that, right, this is a widely used economic activity index, and now it has came below expectation at 46.3. So this is something that we haven't seen since 08 and 2020, right? So every time when we see this, the market actually comes off. So now we are actually at the same level as what we mentioned before. So naturally, guys, it cannot be too difficult to understand this, right? We're going to see some selling soon. So the PMI data is going to go down. Hence, therefore, most likely the stock market will follow through 10, 15%. Why not? All right. If you look at it further all the way back itself, right, you can see that the whole manufacturing activity is contracting right now, and 80 years of data. That means we're going back all the way. Right, from here we are right now, where we are now, you can see we're all the way. We can see 1974 that happened, 1980 it happened before, and 08. So that's why now the economic activity is set to deteriorate further. We all know that. And if the earnings are coming in, even though they are good, but the market is not buying, this actually speaks volume for itself that the boys are actually selling, they are not buying. So you can see right now the yield premium from stocks has vanished and it's going to go to the 0% level. And this is actually from the National Bureau of Economic Research. Okay, it's very critical. So all this information tells you that once we goes into the negative positioning, you can see back here itself, that is where confirm there will be recession. So again, all this information speaks for itself. I'm not making things up. You just have to consider it on your own. And of course, look at the retail money market right now. You can see very clearly that the relationship is very interesting. Take a look, guys. This is where it is right now. When you put the market tops, right, you can see what's happening. So when this is happening, you can see that right now that usually when the market is peaking and turning down for the S&P, right, the money market is also coming down at the same time. So recently, even though there's a lot of people coming in, but the money market ratio now is also dipping. So this explains why that there is a very good chance that S&P 500 will be coming off soon. And of course, we look into deeper, we look at the institutional money market assets, but we can see a very interesting phenomenon. Let me show it to you right now. You can see that if the market is moving upwards, in this case, you can see right now, the stock market actually comes off. Can you see? So when this is moving up this way, okay, you can see that the stock market actually comes off. All right, pretty cool, right? So what is happening right now is that this money market assets, right, is not to going forward because a lot of people are buying into this, okay? When more people are buying into this because they notice that the interest rate is pretty good right now, it's pay better than the stock market, then if that really starts to happen, then naturally we're going to expect the stock market to pull back down. So again, all this information speak for itself. It's only back to you whether do you believe it or not. Because if you ask yourself if the stock market earnings are not there, and despite the earnings are now much better than expected, but the stock are not going up, then the question mark is that means that the boys are actually selling. So with this one here itself, right, look at my chart here, you can see that this is a Dow right now. I know that a lot of people are calling for buy. They think that the Dow is going to go up soon and stuff like that. But look at my KSI, the big boys indicator, they are actually showing that the boys are selling. Now we just need the momentum to turn into blue. Then this will be a very heavy sell call. Now, I'm going to expect the Dow Jones to come down to 33,473 in the near term. So let's see where is it right now. It's trading at 33,848. So which means over 400 points. Well, I don't think it will happen in a single day, but probably within this week. All right. So if you like what you see, what you hear, leave a comment on the comment box. I would like to see that. Okay. This is Cal signing off. Have a great day. Bye-bye.